Let's begin with the last session of our event. Session 4, Harnessing Technology in Strengthening Reporting and Governance. May I please invite on stage Mr. Aravindam Raghunathan, Global Head, Financial Reporting, Control and Accounting, TCS. Mr. Raghunathan, can we have you on stage, please? Ms. Ananya Suneja, Chief Financial Officer, Edelweiss Financial Services Limited. Mr. Jatin Kalra, Representative, ACCA, and Partner, Grant Thornton. Sir, ma'am, can we have you on stage, please? Mr. Rajiv Gupta, President, PB Fintech Limited. This session will be moderated by Mr. Nitin Agarwal, Partner, Deloitte. Can we have all the speakers at the stage, please? Over to you, Mr. Agarwal.
Hi. We're waiting for Jatin Kalra.
Mr. Jatin Kalra, can we have you on the dais, please? So we may start. He's joining us in 2 minutes.
Sure. So good afternoon, everyone. The topic for this afternoon is usage of technology in strengthening reporting and governance. So before we delve into the topic, I would request Arvindam to make a presentation and to set the context, and then we will start our panel discussion after your presentation.
Thank you. Are you able to hear me? Yeah. Thank you. Thank you, CIA, for inviting me. Thank you, esteemed panel. We missed Jatin. Probably he will join us. Let me start with a brief introduction of about the evolution of technology and accounting, where we started, and where we are now. We started with the pre-digital era, and now we are with the latest technologies. We started with ledgers to algorithms, right? We started with manual accounting, where there are still people here who would have seen how the accounting had happened. Now we have come here to using latest and sophisticated technologies like AI for our accounting purposes. Second is we also know that data is king, but what is the use of data without understanding what the data is all about? While the data is king, the insight is power. So then when we have these sort of new technologies, there is always a tightrope of these technologies which is there, right? While technology streamlines processes, what it also does is it creates new vulnerabilities for us, right? How do we handle it, and how did we handle it, and how are we going to handle it is also will matter. And we have also seen that robots or bots do all the work, a lot of manual work. Everything the robots will do. What it will actually do for us would be that it will free us the time for us, and it will enable us to think strategically. Yeah. And for all, the future is now, right? The financial world is changing rapidly. We have to adapt to the new technologies, adapt to the landscape to stay ahead of the curve. Now, how has the technologies have evolved in the decision making, right? The technologies have improved the accuracy, it has addressed the complexity, enhanced auditability, unstructured data it was able to analyze, it has reduced manual processes and stuff, right? It has done a lot of things. This technology has done a lot of things for us. Right? What are the things? For example, AI. AI has become a super smart assistant for us, right? What it has done is it has taken away the grunt work from us. It has helped us to analyze the data. It has to analyze the spots, trends, opportunities, etc. It has more or less, it has become a super smart assistant for us. Case of blockchain, it is an ultimate security guard for us, right? It keeps the finances safe. It makes sure that, there's an unbreakable shield for our finance-related data. And the big data it gives us a crystal ball for the future, right? It enables us to understand the data. It enables us to see the opportunities. How do we prepare for the future, right? So the big data has provided so much of things for us so that it will help us. How do we handle the future? And similarly, regulatory technology, it is more or less, it has become a compliance buddy for us. Yeah, if you use well, probably it will help us in managing or complying with regulatory matters in a much more simplistic manner than spending a lot of time. And now we have come to a stage where there's a tech-powered finance is a key. If we have to be sure that without tech we have to evolve with this or we will be extinct. That is where the accounting profession, the technology profession currently is. Right now, moving on. With new technologies and stuff, there are always ethical risks which are there in terms of decision making when we use AI. Right? What are the AI? Right? When we say AI, it has got blind spots. Right? AI can make biased decisions, so we need to be very, very careful about it. And sometimes we don't know why AI did it. Right? There is a lack of explainability which will be there, which will create problems when we use it for all the purposes without understanding what the data is all about, how did we take decisions. And also, we need to protect our data, right? If you don't protect our data, our business is gone, right? So data breaches, there is a real threat. Yesterday, we might have seen X has been, there is a cyber threat attack on X, right? And fake news, there are real problems. It may be a fake news that is creating real problems for all of us. We might have seen in a lot of places in elections and stuff, right, where AI can use to create fake information. If we rely on those decisions, we have to be very, very extra careful, otherwise we'll take the wrong decisions. And AI and the truth, right? AI will help us find the truth, but also it might spread the lies also. We need to be very, very careful and responsible about this particular, using these AI stuff, right? So now, moving on, how do we protect us from these sort of AI threats that we have, right? So first is, what we need to understand is AI is hacking too, right? There are smart people who use AI for the purpose of hacking, so we need to be very careful. We need to be very, very smart enough in using this technology, and we should not trust anyone, right? We should trust no one actually. We have to be extra careful about who has access to this, and inside and outside of the company. Not necessarily outside the company, inside the company also we need to be careful who has access, responsibilities, those sort of information. We need to make sure that our systems are well geared enough to have that sort of a protection. What we need to understand is the threats are all old threats, right, which have been there for long. But these are all new tricks which has been used by the hackers and everybody to attack those sort of old threats. So we need to see these sort of scammers, are they using these technologies, and we need to stay vigilant in terms of this. And we need to understand also that cyber security, we have to be partners with IT. We cannot be isolated. A reporting financial team cannot be isolated with the IT team. We need to work together and see that what we do in terms of this to make sure that we are not exposed to these sort of threats. And also we need to understand that the compliance is cool, right? It's not that, following the rules, it doesn't mean that we are avoiding fines, right? What we need to see is we need to understand that it protects our reputations and it also makes our customers very happy, right? So now, in terms of, then I thought that, let me cover a thing about, cloud-based accounting systems. Right. So in case of cloud-based accounting systems, the data is a globe-trotting data, right? Data travels the world through the cloud, but we need to know the rules of the rules of the road actually to avoid any surprises which are there. Because if you don't know the rules, then there might be a regulatory issues that we might face. And in terms of when we talk about cloud, these cloud castles, right, need security. If we just leave it just like that, we might be exposed to, and our data will be exposed everywhere, and we need to be careful about it. And when we are interacting with these sort of cloud providers, right, we need to understand they are partners, not providers per se. If you have with a mindset of having they are only providers, we don't consider them as a partner, we will be in real trouble, because when we go in, we have to be very careful about what they have. How is it they will be helping us in the future? Because it is not the current one that we operate, right? We have to make sure that they are, with us for a longer term. Having said that, we also need to have an exit strategy, right? If you don't have an exit strategy, if there is a change which is there, if you don't have a plan to get your data back, we will be in real trouble. Moving on, this is what the conclusion. Currently, the technology is no longer an enabler for us. It is a decision maker, but we need to leverage this responsibly. And with great power comes great responsibility, right? So this leads us to the ethical risk which we saw. And AI is reshaping governance. Cyber security is a very topmost priority for us. And when we talk about cloud adoption, we need to make sure that it is in compliance with the regulatory requirements. Otherwise, we will all be exposed. Thank you for the time. Thank you, Nathan.
Thanks, Arvindam. Thank you for setting the context. So let's delve deeper into the discussion now. Maybe I'll ask first question to you, Arvindam. See, if you look at the CFO organization and uses of technology in CFO world, right? Traditionally, you won't see a lot of modernization initiatives or tech investments were happening, and I'm talking about 10, 15 years ago, right? But if you look at post 2010, and especially I'm talking about the Western markets, right? Regulations really drove a lot of technology and data transformation. And if I talk about the US market, the Dodd-Frank, the Basel, CCAR, CSEL, right? There was a study done there that if you look at some of the large, and I'm talking about especially financial services sector, which is under tremendous regulatory compliance lens. If you look at the data transformation especially, 60-65% of the spend was being driven by the regulatory compliance perspective. So question to you is that what do you see the current stage in India, right? Is it, do you think that, still the regulators are driving that same data transformation, same technology transformation for Indian companies as well?
Thank you, Nitin. India's journey is somewhat different. Are you able to hear, right? Yeah, India's journey is a little different than as compared to the US or other European markets, where there was a lot of regulatory shock in US, right, like what we have mentioned. Right, in Europe, there is a lot of regulatory need of providing a lot of information was there. India was not there to that extent, but however, it is increasing. Basically, what we are seeing, three or four areas which is driving the technology adoption in India, right? One is this increased regulatory scrutiny, where the Companies Act, the SEBI is coming up, a lot of disclosure requirements, right? So in case of RPT, what is actually encouraging the companies to invest in the technology, to have a robust data infrastructure, right? So that they would be able to do it, to make sure that whatever the expectation in terms of the regulator in terms of transparency, right? Accuracy is there, right? That is one. Second, in terms of what we have seen is there is a Digital India initiative which has been done by the government. It is there across all sectors. This has favorably, what it has done is, influenced the companies, I would say, in moving towards this technology adoption, right? The other two is basically increased competition is also a matter, right? There are global companies who are coming into India, and this too, as a matter of competition and making sure that we are ahead of the curve, right? The companies are adopting these sort of technologies, right? So, and the further, technology actually, it also helps in terms of, cost competitiveness, actually. It reduces manual interventions, it reduces, relooks at the process, do it in a very simplified manner, which reduce cost. These are the things which I feel that, it is helping in terms of moving towards technology adoption in India. It's not as fast as, what is there in US, but in case of, India, we are fast moving there.
Got it. So you are saying that not only the regulations, but the other external factors are driving the digital interventions.
Absolutely.
Got it. So Ananya, let me come to you, right? Especially within the CFO function, right? And traditionally, if you try to take lessons learned from the other markets, right? It's a very difficult to justify ROI, so to say, right? From saying that if I'm investing into regulatory compliance, this is my return on my investment, right? And that's where, most of the organization took that as a cost of doing business rather than looking at from transformation perspective. So two questions for you. One is that do you think that the Indian regulators are getting as prescriptive, as demanding as their Western counterpart? And two, how the CFOs are dealing with this, right? From justifying to the organization or justifying to themselves, right, that this is the right investments, right, and making it more seamless in terms of, the new technology adoption.
Yeah, thank you. Am I audible? Okay, thanks for that question. So I think Arvindan covered a little bit of that. I think in India, whilst the regulators are getting more, I wouldn't say prescriptive, so they are also embarking on this technology journey. A lot of RBI's automated data flows, or the SEBI or the MCA 21, where you file various things. All of it is XBRL based, which is also really the core of what the Western regulators are doing in terms of demand. Now, in India, luckily, as a CFO, so far, because in the finance and the compliance functions, the automation is driven by need and by cost of doing business. So ROIs have never needed to be justified. And therefore, as a corollary to that, we've also had a situation where now automated reporting is being done for the sake of automated reporting. I think, speaking for a lot of people in this room, I think the core of XBRL still remains a lot of Excel. We don't have end-to-end record to report type of transaction suites in this country yet. I think even globally they are rare because the investment is in front-facing customer acquisition, or more what I call the glamorous side of technology, not so much the reporting side of technology. So I think we are at a nascent stage in there. So to your question on the cost side, I've never seen anybody having to need to justify it because it is what it is. Making the adoption seamless is actually a set of things to do. I think the organization has to be rewired for that. I think from a mindset of trying to use this automated type of reporting for internal decision making, it cannot be that you have two sets of data to look at, right? Transaction data quality, capture, re-engineering processes. We try to do lift and shift into technology. So what we were doing, the 10 steps into a new model is not very effective. And I think what we are coming to is basically re-engineering the landscape. If you want to really adopt technology to what can be, and Arvindan has shown us some of the tools that are available and technologies that are available, I think there's a promise of a huge change around the corner. I personally think that we are a little further away from that. So what's being pushed upon, we are working on it as an industry. What's avoidable, we are still on Excel, which is a 80s tool, I think. So, yeah.
Got it. Thanks. So Rajiv, I'll come to you now. I mean, from the business ownership perspective, right? See, how do businesses, obviously regulators are asking whatever they need to do, right? How businesses will change their narrative, right? Instead of taking this as a compliance burden versus, uh, taking it as a lens from transformation perspective, how do they change the narrative within the firm or within the organizations? And especially, for the smaller firms or even the medium-sized firms, right? It is just not like, just doing bare minimum to meet the compliance, right? If you really wanted to make a difference from transformation perspective, as Arvinder was also talking about, it does mean that you need to look at holistically the transformation of the data, the underlying tech stack. It requires significant investments, right? It's just not you try to do, put the lipstick on the pig, right? You need to change it, right? So how do you businesses change this narrative, from justifying this from investment perspective?
So thank you, Nitin. I think at PB FinTech, we run two large tech companies. We run Policy Bazaar and we run Paisa Bazaar, apart from the other ventures. And I can tell you the initial years were all about numbers, growth, and so how much do you grow by, But over the last couple of years, we've seen, compliance is no longer only avoiding penalties. I mean, there was a time we said, okay, take a penalty, bhar denge, grow kar lo. You can grow at a certain pace. It's now more about adopting, compliance in a big way so that you protect your future. And we have seen companies going down the line without naming them, and suffering, both in terms of market cap, both in terms of credibility, if this is not adopted soon, A lot of companies, fintech players and large organizations are now looking at compliance by design, where I think the corporate governance framework is getting, adopted into the business processes rather than, waiting for an incident to happen. I think that's clearly a big change which we are seeing. And I'll share some examples within the PB FinTech group in terms of how we are, doing that later. Clearly, I think the regulatory technology, as mentioned by Arvindan in his presentation, is playing a key role in, in ensuring that technology is able to generate, and help you, meet compliance requirements far efficiently than you would do otherwise, where manually somebody would sit and see whether you have sent this report and sent that report and blah, blah, blah. The other area is, I think, traditional compliance used to be reactive. I think now the time with new technologies coming in, with AI, blockchain, and the other technologies coming in, we are now far more proactive. So in terms of adopting compliance tools within the company, tools are helping you to generate the right reports. It is helping you to prevent frauds, which used to happen. It is helping you to understand what can happen, based on the reports which you generate in advance, so that you can take preparatory steps to be able to avoid such situations in future. Particularly in the sector in which I represent and many of us sitting here represent, in the financial services world, credibility is very crucial, right? And we have seen that if customer loses trust, 65% of your customers are likely to go, as per one of the consultants companies' reports, are likely to go out to your competitor. Such is the kind of impact and building trust and credibility have become so crucial.
Cloud adoption, we need to make sure that it is in compliance with the regulatory requirements. Otherwise, we will all be exposed. Thank you for the time. Thank you, Nitin.
Thanks, Arvindam. Thank you for setting the context. So let's delve deeper into the discussion now. Maybe I'll ask first question to you, Arvindam. See, if you look at the CFO organization and uses of technology in CFO world, right? Traditionally, you won't see a lot of modernization initiatives or tech investments were happening, and I'm talking about 10, 15 years ago, right? But if you look at post 2010, and especially I'm talking about the Western markets, right? Regulations really drove a lot of technology and data transformation. And if I talk about the US market, the Dodd-Frank, the Basel, CCAR, CSEL, right? There was a study done there that if you look at some of the large, and I'm talking about especially financial services sector, which is under tremendous regulatory compliance lens. If you look at the data transformation especially, 60-65% of the spend was being driven by the regulatory compliance perspective. So question to you is that what do you see the current stage in India, right? Is it, do you think that, still the regulators are driving that same data transformation, same technology transformation for Indian companies as well?
Thank you, Nitin. India's journey is somewhat different. I able to hear, right? Yeah, India's journey is a little different than as compared to the US or other European markets, where there was a lot of regulatory shock in US, right, like what we have mentioned. Right, in Europe, there is a lot of regulatory need of providing a lot of information was there. India was not there to that extent, but however, it is increasing. Basically, what we are seeing, three or four areas that which is driving the technology adoption in India, right? One is this increased regulatory scrutiny, where the Companies Act, the SEBI is coming up, a lot of disclosure requirements, right? So in case of RPT, what is actually encouraging the companies to invest in the technology, to have a robust data infrastructure, right? So that they would be able to do it to make sure that whatever the expectation in terms of the regulator in terms of transparency, right, accuracy is there, right? That is one. Second, in terms of what we have seen is there is a Digital India initiative which has been done by the government. It is there across all sectors. This has favorably, what it has done is, influenced the companies, I would say, in moving towards this technology adoption, right? The other two is basically increased competition is also a matter, right? There are global companies who are coming into India, and this too, as a matter of competition and making sure that we are ahead of the curve, right? The companies are adopting these sort of technologies, right? So, and the further, technology actually, it also helps in terms of, cost competitiveness, actually. It reduces manual interventions, it reduces, relooks at the process, do it in a very simplified manner, which reduce cost. These are the things which I feel that, it is helping in terms of moving towards technology adoption in India. It's not as fast as, what is there in US, but in case of, India, we are fast moving there.
Got it. So you are saying that not only the regulations, but the other external factors are driving the digital interventions.
Absolutely.
Got it. So Ananya, let me come to you, right? Especially within the CFO function, right? And traditionally, if you try to take lessons learned from the other markets, right? It's a very difficult to justify ROI, so to say, right? From saying that if I'm investing into regulatory compliance, this is my return on my investment, right? And that's where, most of the organization took that as a cost of doing business rather than looking at it from transformation perspective. So two questions for you. One is that do you think that the Indian regulators are getting as prescriptive, as demanding as their Western counterpart? And two, how the CFOs are dealing with this, right? From justifying to the organization or justifying to themselves, right? That this is the right investments, right? And making it more seamless in terms of, the new technology adoption.
Yeah, thank you. Am I audible? Okay, thanks for that question. So I think Arvindan covered a little bit of that. I think in India, whilst the regulators are getting more, I wouldn't say prescriptive, so they are also embarking on this technology journey. A lot of RBI's automated data flows, or the SEBI or the MCA 21, where you file various things. All of it is XBRL based, which is also really the core of what the Western regulators are doing in terms of demand. Now, in India, luckily, as a CFO, so far, because in the finance and the compliance functions, the automation is driven by need and by cost of doing business. So ROIs have never needed to be justified. And therefore, as a corollary to that, we've also had a situation where now automated reporting is being done for the sake of automated reporting. I think speaking for a lot of people in this room, I think the core of XBRL still remains a lot of Excel. We don't have end-to-end record to report type of transaction suites in this country yet. I think even globally they are rare because the investment is in front-facing customer acquisition or more what I call the glamorous side of technology, not so much the reporting side of technology. So I think we are at a nascent stage in there. So to your question on the cost side, I've never seen anybody having to need to justify it because it is what it is. Making the adoption seamless is actually a set of things to do. I think the organization has to be rewired for that. I think from a mindset of trying to use this automated type of reporting for internal decision making, it cannot be that you have two sets of data to look at, right? Transaction data quality, capture, re-engineering processes. We try to do lift and shift into technology. So what we were doing, the 10 steps into a new model is not very effective. And I think what we are coming to is basically re-engineering the landscape. If you want to really adopt technology to what can be, and Arvind has shown us some of the tools that are available and technologies that are available, I think there's a promise of a huge change around the corner. I personally think that we are a little further away from that. So what's being pushed upon, we are working on it as an industry. What's avoidable, we are still on Excel, which is a 80s tool, I think. So, yeah.
Got it. Thanks. So Rajiv, I'll come to you now. I mean, from the business ownership perspective, right? See, how do businesses, obviously regulators are asking whatever they need to do, right? How businesses will change their narrative, right? Instead of taking this as a compliance burden versus, taking it as a lens from transformation perspective, how do they change the narrative within the firm or within the organizations? And especially, for the smaller firms or even the medium-sized firms, right? It is just not like, just doing bare minimum to meet the compliance, right? If you really wanted to make a difference from transformation perspective, as Arvinder was also talking about, it does mean that you need to look at holistically the transformation of the data, the underlying tech stack. It requires significant investments, right? It's just not you try to do, put the lipstick on the pig, right? You need to change it, right? So how do businesses change this narrative, from justifying this from investment perspective?
So thank you, Nitin. I think at PB Fintech, we run two large tech companies. We run Policy Bazaar and we run Paisa Bazaar, apart from the other ventures. And I can tell you the initial years were all about numbers, growth, and so how much do you grow by, But over the last couple of years, we have seen, compliance is no longer only avoiding penalties. I mean, there was a time we said, okay, take a penalty, bhar denge, grow kar lo. You can grow at a certain pace. It's now more about adopting, compliance in a big way so that you protect your future. And we've seen companies going down the line without naming them, and suffering, both in terms of market cap, both in terms of credibility, if this is not adopted soon, A lot of companies, fintech players and large organizations are now looking at compliance by design, where I think the corporate governance framework is getting, adopted into the business processes rather than, waiting for an incident to happen. I think that's clearly a big change which we are seeing. And I'll share some examples within the PB Fintech group in terms of how we are, doing that later. Clearly, I think the regulatory technology, as mentioned by Arvindan in his presentation, is playing a key role in, in ensuring that technology is able to generate, and help you, meet compliance requirements far efficiently than you would do otherwise, where manually somebody would sit and see whether you have sent this report and sent that report and blah, blah, blah. The other area is, I think, traditional compliance used to be reactive. I think now the time with new technologies coming in, with AI, blockchain, and the other technologies coming in, we are now far more proactive. So in terms of adopting, compliance tools within the company, tools are helping you to generate the right reports, it is helping you to prevent frauds, which used to happen. It is helping you to understand what can happen, based on the reports which you generate in advance, so that you can take preparatory steps to be able to avoid such situations in future. Particularly in the sector in which I represent and many of us sitting here represent, in the financial services world, credibility is very crucial, right? And we have seen that if customer loses trust, 65% of your customers are likely to go, as per one of the consultants company's reports, are likely to go out to your competitor. Such is the kind of impact, and building trust and credibility have become so crucial. So I was asking my CTO, since I am the business guy, so I was asking my CTO what are the things we have done, at PB FinTech over the last years. Obviously, we've also adopted a lot of compliance tools over the last 3 years. I wouldn't say we were always big on compliance. We were certainly meeting the requirements which are mandatory, and sometimes we were also pleased to pay those penalties, saying that ठीक है business तो कर लिया अभी. But now I think that story is all over. I also wear the hat of the group chief risk officer in addition to whatever I do, in the company. And I can tell you, across businesses, across IT, this is taken far more seriously, And I think today we have certainly automated our entire compliance using AI in a very big way. In Policy Bazaar, we have also built in seamless KYC onboarding, in which we, through video testimonials or video KYC, are able to predict if there is a fraud coming in buying a policy. I mean, we are able to match the KYC documents with the face. Though these guys are always ahead of you, but I think we've been able to prevent so many such frauds or mishaps across the Policy Bazaar before identifying a customer whether he's fit to buy a policy or not. I think we have certainly taken a lot of data security measures within the group, because we deal with a lot of data. On any given day, we handle about 3 lakh calls. I mean, the model is, people call us and, we call back. So both outbound and inbound calls, we handle about 3 lakh calls every day in Policy Bazaar, and maybe probably 1.5 lakh calls in Paisa Bazaar. So the kind of data which we deal with, and particularly with the data privacy bill coming in, this is going to become far more challenging. And the biggest challenge for us is the data doesn't rest only with us. So once we get the customer on board, the data is further shared through, API with the insurer, with the TPA, with the hospitals for claims, with the motor garages for claims. But the primary owners continues to remain with us, So we've kind of really built data encryption protocols, to ensure that we protect sensitive data. And we're still working hard on that to make this happen. We have been one of the early ones to implement, blockchain for audit trails. The CFO sitting right here, I think that certainly is helping us, in a big way when we obviously do regular audits. PwC was an auditor earlier, now it is, somebody else. I think we have really matured, on that front for sure, And today as an organization, compliance is no more looked as a burden or a cost center, I mean, there was a time when said, why spend so much money? I mean, today I don't think there is any iota of hesitation when it says that I need to appoint, a consultant who's going to cost me so much. I need to, invest in these kind of technology. People say, do whatever you want, see that we don't, break us. That's a change which is visible, which is very, very clearly visible. So things are changing rapidly, but a lot needs to be done. I think I wouldn't say that, everything is hunky-dory here, but I guess the awareness around compliance is getting strengthened with all the regulators, bringing in focus, whether it's RBI, whether it is SEBI, whether it's IRDA. I think clearly this is going to play a crucial role, in building large businesses.
No, I think this is great that you highlighted. It's no more being seen as a burden to comply, but this is more like, it gives you the competitive advantage, you said, the trust, right? Which is very critical in your business. So let me move to Jatin. In terms of, you do a lot of CFO advisory and other things. What do you see? Because still, as the regulations are getting evolved, in terms of the implementation, you will find a lot of inconsistencies, right? What's your view? What do you see? Do you see what just Rajiv talked about, do you see that kind of, rosy picture everywhere, or you think that it's a lot of painful process or inconsistencies are there across different businesses?
No, thanks, Nitin. Okay, so it's a complicated question. On the first part, definitely we see a lot of movement from the regulators, a lot of evolution over the past decade at least, if I can take that time frame. Especially, I would say in the fields of financial reporting, risk management, corporate governance. In financial reporting, of course, we had India's come in for the last decade. We have had that. I think it was excellent how the regulators, MCA, ICI, they brought in India's. They really made sure that we are on IFRS 9, IFRS 15, the most up-to-date standards. We don't delay it unnecessarily. We don't have carve-outs. So it was done in a very, I would say, assertive manner by the regulators, which was excellent. On risk management, we had RBI, they have been increasing their focus on risk-based supervision, which has been really, again, a progressive step. SEBI, of course, gets a lot of applause from the perspective of how they are strengthening corporate governance. The consistent focus on that has really helped. There are, of course, elements which are still to be addressed. There's ECL for banks, there's IFRS 17 for insurance companies, which, again, would be expected soon. But on your question of consistent application, can we say on these areas, India's corporate governance, all of these areas where regulations have come in, which are very good regulations, global best standards, has application been consistent and, meeting the objectives of these regulations consistently? I think that's a work in progress. There are elements on that which really could help further. We of course, whenever it comes to new regulations, there are a lot of questions, clarifications, issues which come up in the industry, and more regular, prompt addressal of those issues can really help, of course, in consistent application. We have had regulators focus a lot more on that, which really is, of course, helping in that front. But what I'll say, of course, is when it comes to direction we are taking, India, of course, is, I think, one of the fastest in terms of bringing in these regulations. We had a large gap also, but how each of the regulator is taking it now, and how the industry also is, not forcing back unreasonably in terms of wanting to delay these things, but accepting it and adopting it in a very positive manner. I think we are on the right path in terms of becoming probably the best across nations when it comes to having the best standards, having the best regulations for us.
Okay, so no, thanks for the answer. I mean, Arvind, I'm coming to you, right? I mean, so it's no-brainer. We need to use the technology, get this, whether it's a market dynamics which is forcing us to create the trust in the system, or regulators are driving it, right? But it is now, I'm coming to more how part, right? How do you, move the needle and invest in this technology? It's extremely difficult for the organizations, right? You are IFRS 17 you talked about, right? Insurance companies are sitting on the data which is for last 30 years, 40 years, doing the cash flow projections a little bit differently what IFRS 17 is asking you to do, and change the complete modeling the way you have been traditionally doing. It's difficult. So what do you think, how people should move, or companies should move to this newer technology adoption? I'm talking more on the how part. You talked about a lot of technologies, they are available, right? But how do the company move to newer technologies adoption?
Thank you, Nitin. That's a very good question, actually. So if I were there, right, I would give 3 sets of advices. Yeah. One is, what I would say is, don't try to do everything at once, right? It is necessary that we prioritize, right? We need to first identify what the problem is. For example, in a reporting area, right? Is it manual accounting is a problem, manual entry is a problem, or is it compliance to regulation is a problem, or what the real issue is. Identify the issue. Because see, there are a lot of technologies and solutions that are available in the market. If you try to do everything at once, you're going to fail. Right? When we identify the issue and then look at the technology and then look at what is it, the solutions which are available, there is a better probability of success. Now let me give an example of TCS itself, right? So there are a couple of examples that I given from a TCS perspective. See, if you look at our AGM, right, annual general meeting, there is an instruction from the board that they want to conduct the annual general meeting in 60 days, right? It means that the integrated reporting report has to be given 21 days in advance, right? So now there is a BRSR reporting is there. There is a, see, if a TCS scale, if you look at it, right, it is, we operate in more than 45 countries. We have 50 plus subsidiaries. There are, audit, we have to finish, the year end is 31st March. Then we have to have the AGM at May 30th. So what actually happens is then we have to plan, right? What are the things that we need to do in terms of this? What are the technologies that are available? So we identified the issue, and when we look back, right, so the next competitor or whatever is nearly 50% higher. If you have 60 days, the other one is 86 days, right? And we have bet even our own stuff, which used to be at 75 days, which we did at 60 days, right? So what I would say is when we know what the issue is, it is very easy to understand what we need to do, right? The second, in terms from an employee experience perspective also, not one example I gave it from a reporting perspective. So you know that TCS has more than 100,000 employees, 600,000 employees, right? We have expense reimbursement to the extent of 1.2 million per year, right? So if you want to do it manually, it's a huge team that we need to have, right? So what we did was, we adopted two approach. One is trust but verify, right? So what we did was we had a technology which will be able to analyze the expense claims and make sure that, we be able to do a straight through processing, understand the outliers, and then do this sort of based on the behavior of the claims, behavior of the people, then we did that sort of an analysis and we were able to do it. The employee satisfaction greatly went up due to this. Right, that is the first one. The second, what I would say is there needs to be a culture of innovation and collaboration should be within the organization, right? That is very, very must. All right, if you look at it, we have to change the mindsets of the people, right? We have to break the silos between IT and finance, right? So, and also we have to invest in training, sort of a thing. Unless we do all of these things, and also we need to have some sort of small wins during the long process. What is we need to, otherwise, if you have a short 1.5 years, we will do something and we don't do anything till then, right? Obviously it is going to fail. The third one is, take the help of providers, technology providers like TCS, right? So, so we are there for that, right? So now, see, even for own purposes, right? For example, for taxation, we go to Deloitte, right? For internal audit, we go to PwC. There is nothing wrong where we go and ask for support, right? And this way, what I would say is, this approach, whatever which we have done internally, which I feel that, which will help in terms of adopting this so that, they will be successful.
No, thank you. You being a technology company, I think some of these technology changes comes naturally to you, but for the other companies, it may not be that simple. But I think the point you are raising is that go by use case driven, take the smaller chunk and try to, proceed towards a bigger change and have that change culture in the organization. That's important. So I'll come back to you, Rajiv, about it, right? That, see, you are saying that you have also adopted a lot of technology in your organizations, and I'm sure that it will create a lot of disruption, a lot of changes for, not only the senior management, but for also, for employees also, right? How do you prepare for this change, disruption? Any tips you want to share with the audience?
So I think for us, I would say the challenge was not so severe because we were a tech company right from day one. Obviously, both the platforms we run are tech platforms. But one of the biggest challenges which we see, is obviously the mindset within the leadership and the top management in terms of adopting technology. So building the required literacy, within the leadership group first in terms of why technology is important, and taking consistent efforts, in terms of creating the right talent who are able to use the AI, the new tools, the blockchain is so crucial. I mean, for organizations to adopt those technologies, I mean, that's something which we are focusing. So obviously, even within our own company, we see lack of many AI professionals, both available outside or within. So we are taking enough steps to ensure that if we have to grow in size, we need also skilled manpower. I mean, and that's one area we're trying to focus in a big way. I mean, this is true for companies like us, but if you look at digital literacy in the country, where we are, right? I mean, leave alone digital literacy, financial literacy, we are at such pathetic levels if you go beyond tier 1 cities. And today I think it's important to run co-curriculum programs within tier 2, tier 3 colleges, where adopting, technologies at early age, with the help of corporates will help us build right talent, particularly when you want to grow into this country of a size of 150 crores. I think that becomes extremely crucial. I think at the same time, balancing, between adoption and risk management is equally crucial. Sometimes rapid adoption of technology can also expose you to cyber threats. And so learning and failing fast is very crucial, I would say. So it's important to do the sandbox testing. Particularly, we do a lot of sandbox work with the regulators, so that when we adopt technology or when we implement in full force, we have learned the hard way, and I think the implementation is far more easier in those cases. Secondly, when we launched Policy Bazaar, the first company we launched, the biggest challenge we faced was obviously the regulator did not understand what to do with aggregators. So there were no policies around, how to deal with aggregators, how to deal with this tech, companies. And we were partnering with legacy organizations, right? In terms of trying to tell them we want to offer comparative plans to customers, and customers would then choose, so legacy systems were coming in the way. So somewhere I think it's important to partner. I mean, today the way things are looked at is old age legacy organizations are willing to partner with fintechs and startups, to build the required agility, to improve customer service, to get more modernized, I mean, when I said we deal with so many calls every day, I can tell you over the last decade, I mean, apart from obviously creating so much visibility around insurance, because insurance even till date, none of us get up early in the morning to go and buy insurance. Even sitting in this room, insurance is still being sold or pushed. That's not your priority. Look at what's happening across the country. After 25 years of the sector opening up, penetration levels are coming down. So imagine the issue around the country. Because here, I think partnerships are going to play a big role. I don't think startups and fintechs are a threat anymore. I think, in my opinion, that's a very strong partnership which will help us to cross the mile which we want to cross in terms of insurance for all by 2047 or banking for all by 2047. And if you have to build financial literacy in this country, see, Jan Dhan bank accounts certainly has helped people to have a bank account, but what do they do with that? I mean, how many of them really know where to borrow, how to borrow? So today, technology is certainly helping us to reach, in the remote areas through video testimonials, through video, programs. We are able to teach people, very, very basic, simple things, how things will work. I think, in my opinion, disruption is not about replacing legacy, right? It's about reimagining it. The winners will be those who can build agility and governance together. I think that's the way we look at it.
No, I think you raised some of the very important points that leadership literacy, bringing the new talent, looking at the ecosystem of startups, technology, and look at them as an enabler rather than disruptor, right? So very important points. So I'll come back to you, Ananya, now, right? That being a CFO these days is not an easy task, right? The old days, CFO used to be, making sure that the compliance is done. But today, if you look at the CFO's job, not only you need to do what you were supposed to do, but also you are the data strategist. You are the, you need to protect your organization from cyber threats. You need to look at, what kind of data privacy laws are there. You need to comply with that. You need to collaborate now much greater way with other parts of the organization, whether it's a CIO organization or CISO organization. You need to build cross-functional teams, drive the automated reporting. And by the way, not that all, you need to also look at new set of reportings like ESG and other kind of things. So, it's really changed, a complete job profile of a CFO. What's your take on it? What do you advise the new CFOs or the other CFOs? What is the mantra of success here?
So you're right. I think it has changed, evolved a lot. And actually, there's been no more exciting time than to be a CFO now, with all of this on the plate. I think, so I'll take one part of your question, which is on the collaboration side. I think we all mentioned that we've got to work, finance, compliance, governance has to work much more closely with IT than ever before. The roles are very clear. I think the CFO function becomes a strategist in terms of the end solution or the architecture, because eventually you are the counterpart for the regulator. You are responsible for the accuracy of the numbers, the correctness of the disclosures, and hence a lot of the decisions on what the frame should be, what the architecture should be, what the build should be, should come from there. But the CFO team doesn't do that alone. You work very closely with the CIO, who is basically the enabler for the entire ecosystem. In my opinion, it's a very important role. It covers everything from, maintenance of your networks to development of the architecture, even to, support and make by plug and play decisions. Because there are a lot of people out there, including TCS, who offer solutions, but a lot of solutions need to be customized. I'll come to that in a bit. But the CIO is definitely a very important partner to have. There is also the CISO role, which is increasingly with the DPDP Act, with the importance on cyber security, becoming a very important role. That's a guardrail for the entire organization, not only for the CFO function, but across. So, and if I solely in the, the ambit of the CFO function, if I talk about data security, it's also about keeping the information to yourself till it can be, right? So a lot of competitive advantage is lost if information is not on a need-to-know basis and not on a need-to-access basis. So a CISO function also becomes very important. So in terms of collaboration, I think the CFO role has changed completely. Definitely you have to have a seat at the table and monitor business strategy as well, because business also, and I think Rajiv, you mentioned a few things, the business also is not in a standalone limbo. Business is also tech enabled, and if you look at the record to report cycle, it is basically what the customer does right up to the final accounts and notes and the disclosures should actually be a seamless flow. I think in our imagination it is possible, and I think we all strive to that. The other point is, how do you get there, right? So I think for CFOs, and any finance professional actually, I think the trick is to up your tech quotient. Our education, especially for people from my generation or nearabouts, has not really equipped us for a tech-enabled world. So we need upskilling, we need training as a function, and a whole lot of it is much more than we think we do. For CFOs, I think reverse mentoring with the younger generation, Gen Z, or folks who take the technology in a completely different way is an easy way to adopt, because you really don't need to know the nitty-gritties of coding. You just have to have the adaptability. So that's in terms of what CFO should learn, and the function should learn as a whole. The last but not the least is essentially, I think we talked about mindset. I think it's about acceptance. I think it's about acceptance that the world is going somewhere else. The change is coming sooner than we think. If we can start seeding AI into financial reporting and disclosures in a small way, and I'm still using the word seeding because we've talked about black box, etc. It has its risks, but if we do it in a calibrated manner, we are going to see some really good outcomes. Sometimes you win, sometimes you learn. In this case, maybe you will be learning more than winning in the initial days. And I think we also have a way to go, and we keep talking about AI, but I think in terms of ERPs and other systems, I think we have some way to go. If I speak about Edelweiss and some of the use cases that we have now, we have a data warehouse, a data lake concept, which has gone live. But on the back of that, which is the bare backbone for the accounting and reporting schedules, we've also managed to build small tools on top of that for example, RPT. We all know how important it is. This is early warning signals on RPT breaches, and that's something that's of a concern to us, so that's something we built on our own. The consolidated auditor reporting vis-a-vis the reliance on subsidiary auditors, I think there's a lot of work to be done in that space. These are very niche financial reporting requirements, but we have built the technology infrastructure for that. We are also looking to, final stages of automating the notes to accounts. Obviously, there will still be a 4-eye check and a validation that will be done by the human eye, by the team, but I think we want to take away the effort and make it more value add. So I think the CFO function really, if you ask me, is transitioning from being a doer to a thinker to an analyzer and a risk management professional. It's a completely different ball game, and we all just need to be ready for that, especially the younger folk in this room. Yeah.
Thanks. And let me ask you maybe a follow-up question on the same thing, right? And maybe this comes naturally to you because you come from engineering background and, being a CFO. But any advice, you said that having the technology literacy increased in your team is very important. I mean, how do you do it? Is it like the danda you use or FOMO are you use saying that if you don't do it, then somebody will take your job? Or is it more, this is a reward-based? How do you do? I mean, it's difficult to do it, right? Especially with finance professionals.
Yeah, some of my team is here. It's going to be a difficult answer to give. But I think you live and learn. I think there are people who adapt to technology fairly well. It is an intrinsic motivation, and I think that's the final lever that will work. But I wouldn't hedge. I think in the early days, there is a little bit of a stick approach, and that's only in the early days. The once you get the small wins going, one tool, one module, one part of the ecosystem, I think everybody else is intrinsically motivated to pick that up. And that is why the small win modular approach is very, very important. One big trying to say I will automate it from end to end will not work. But it is easier said than done. And one thing that we have struggled with is the training. Practical training in this aspect is not really available. We get a lot of either coding, which is not again the point. It is about actually systemic critical thinking and technology, which is a cusp training that is unique, and maybe if nobody else develops it, maybe at Edelweiss we can try to do something in that space. But happy to hear from this audience if there are any ideas out there. But it's a struggle, and it's going to become important as the NLPs of the world take over. People will have to learn very, very fast.
And I think the technologies are also evolving, becoming
Very
more
fast.
user-friendly, right? The no-code, low-code platforms, the self-servicing. You don't need to engineer anymore to use some of these technologies, right?
So in fact, one of the things in our entire architecture is, we've not built for reports. So when we started implementing our own data warehouse, I think our implementation partner, Big Four implementation, I asked her, what reports do you want to automate? Give us the top 15, 20 reports that you have. And I think we took a very important call. Then we said, no, it needs to be self-service. It really needs to be self-service. Otherwise, by the time you build the reports and do the UAT, they are outdated. And that has held us in good stead. In fact, we have done a few more implementations where I think the mantra, and I think now the principle accepted in the team is essentially that we'll go for self-build. Low code, no code, or even, self-help. Because the technology enables that today.
Thanks. So,
Nitin, can I add a...
Sure, please.
See, the thing is what we do in terms of, driving this sort of thing will be machine-first model, right? If an activity can be done by a machine, it should be done by the machine. And whenever a decision needs to be taken, right, that is when a human needs to be involved. This sort of a communication in terms of this thing has to clearly go to the, the employees, right, to whoever is working on it. Because we don't want them to do non-value added work. What we wanted to do them was a decision making where it adds value to them, it adds value to the organization. And this sort of a communication which always goes to them in terms of saying that you automate it not because we want to remove, right? It is basically we wanted to do it because it will be good for you, right?
Makes sense. It makes sense. And now I think we are going even one step further to, in fact, have the machine taking the decisions also. So anyway, that's a good point. Now coming back, I think this was a good. I'm just trying to, in the interest of time, moving slightly more on the technology risk segment now. And you talked about a lot of the risk, whether it's a cyber defense or it's hallucination, data privacy issues and stuff like that, right? I mean, there's no, it's a no-brainer to kind of companies to invest and, in the defense mechanism and all that, right? What do you think which is working out? What are the things, if you want to talk about 2 or 3 key takeaways, and you talked about some of the prescriptive ways to kind of, these are the ways you do it. I mean, those are all frameworks that are available, but what is really working out for the companies, what they are doing and what they should do?
See, we are using a lot of technology and data. So there is a real possibility that there will be cyber attacks. It might be in terms of malware, ransomware, deep fake. These sort of things is going to be a given, right? Now we need to prepare for it. Right. There are, I can tell you what.
How do we prepare for that?
Prepare for it. See, there are 2, 3 things, right? One is in terms of authentication, right? In terms of authentication, we need to have multi-factor authentication, which we should do that. We should, that is the first thing which I would say. And also, it also needs to prevent unauthorized access. See, this way we'll be able to prevent it. And the second is an encryption of data. So that is also basically not in terms of while the data is in transit and also when it's at rest. So we need to make sure that sort of an encryption should be there. So these are all what I would say from a technology perspective, right? But this is also what we need to do is there should be a regular security audit should be done, right? So, and because that is very, very important because it will give us an outside-in view of where we are in terms of it. So take that sort of a best class in experience, and so that we'll be able to fix it if there are any sort of a thing. And again, employee training, right? So that is also a must. We being an IT company and we service a lot of big customers, right? There is a regular training which is being given. If you don't complete the security related training, you will not be having access to our systems, right? So there is a mandate which is there. So these sort of things helps in terms of doing it from a cyber perspective, right? In terms of you're talking about data hallucination, right? It is basically what is data hallucination? It gives misleading information when this thing is used. Here also, first is we have to make sure that the data, because see, where the AI is giving us information from the data, right? We need to make sure that there is a valid data. We need to validate the output of the data, and also from a human in the loop sort of a thing which will always help. Because mainly when you look at from an accounting and a reporting perspective, right? So we need to make sure that somebody is viewing this data before it gets published, it goes out. Otherwise we will be in real trouble because it gets published elsewhere. Similarly, in terms of GDPR, there's a privacy of data. Privacy is a reputational problem. It will affect a company, it will affect employees, vendors, customers, everybody. So in this, what we do actually in terms of we collect as minimal data as necessary, right? And wherever it is possible, we anonymize the data, right? So that is, that is the second thing that we do. And also in terms of whenever we collect data, even from a vendor or a customer, we have clear information which is given to them about what information is there, and we take the consent of them.
Got it. No, I think this is great. I mean, especially the training aspect of it is very important. Building some of the mechanism, what you're talking about when you're designing new system, the access, the way you are controlling it, data, etc. Very, very good points. Jatin, I'm just shifting again a little bit from the audit committee perspective, right? I mean, if you look at these technologies are available to everyone, right? How do you think this audit committees needs to prepare themselves to identify some of these risk upfront and fraudulent, activities upfront? How do they gear up for these new technologies? How are they currently doing, to make themselves aware and literate about some of these things? What do you see in the market?
No, excellent question. And, we of course spoke about, from a compliance perspective, how technology is shifting the game, from a finance CFO function perspective, how it's changing it. From a audit perspective, be it statutory audit, internal audit, or audit committee or governance in that sense, also, of course, it is causing a very significant shift. What we see, of course, is while it's slower, I would say, it is not as widespread, the use of, for example, technology. But there's a massive amount of investment which all firms are now doing, massive amount of, trainings which people are doing to really accelerate on that. To give you example, one area where, we have made the most progress, of course, is being able to analyze very large amount of data sets, identify trends, outliers, inconsistencies, and from there, being able to audit, which, it's not possible humanly or not possible in a sample-based approach. Extending the scope of audit much wider than, traditionally what it was done. And of course, that's going to bring in massive amount of benefit when it comes to the objectives of audit. So when it comes to audit committee, I think there are two key elements. One, of course, understanding the whole power of technology, be it the traditional technologies like, big data, data science, and analytics, or also the Gen AI agents, which now, of course, can help in decision making, fraud identification, all of that. Understanding the use cases, understanding, how essentially that can bring in the benefits. And I believe second is audit committees, of course, would identify who would work on these elements, be it firms, be it internally. When they're evaluating audit plans, when they're evaluating teams who would do the work, really recognizing how good the technology came for them is. Because over time, of course, if organizations are investing in technology, are rethinking how they can make audit plans which can really optimize the use of the emerging technologies, then we'll see, of course, progress and ultimately better resilience, better strength in terms of the entire financial sector. So we really think these two elements would really help bring that change which we intend.
Thanks, Jatin. So I'm coming back to you, Ananya. See, these risks are very real, right? Who in the organization should take the accountability to manage these risks, technology risk I'm talking about, especially in the context of reporting, reg reporting. You being CFO is the fiduciary, you have a fiduciary responsibility of it. But there is a CIO, there is a CISO as well. And you talked about collaboration earlier in the discussion. But tell me, does it, depends organization to organization, or who should take the front lead and, bring it all together for the organization? Will you say that it's a CISO's job, or it's a CIO's job, or it's your job?
It's a tough one. Because like I said about collaboration, I don't think any one person I'll flip that question around a little bit, maybe easier, something we have deliberated in our risk committee meetings as to who handles reputational risk for an organization. It's akin to that. Not one single person can completely prevent it or completely assess it. It is a team game. See, senior leadership profiles, whether it's CIO, CSO, CFO, COO, whatever, are T-shaped profiles, right? So you have domain speciality and you have general ability to understand the breadth. So if you have the right senior management and if they are collaborative, in my opinion, this risk mitigation, risk assessment, mitigation, planning, the entire part is really a team game. It's not a cop-out. It is very difficult. And then I think practically in organization to organization, individual to individual, there are people who have certain strengths, slightly different from their peers, and they naturally take the lead. But I don't think it can be prescriptive for an organization to take.
So in your organization, who takes the lead?
It's a team game. Yeah.
Okay. Okay, that's good. So Raju, I think that's my concluding question here, and maybe we can open for audience for any other questions. See, if you look at the globally, the world is rattled with the changes which are happening. You know, it's a whether you take it a geopolitical disruptions, you look at the technology disruptions, you look at the tariff bars, the wars going on between different countries. See, business is really kind of, need to take into account all these risks. Do you think that our corporate governance, corporate reporting, is matured enough or kind of give the enough early stress warning to the stakeholders? Do you think that enough has been done in this space, or do you think a lot more needed to be done here? What's your take?
I think journey less traveled so far, I guess, particularly from our own country's perspective, there is a big journey to travel as far as this is concerned. I think we still rely on historical data, which certainly doesn't help anymore, right? Because it's not predictive. So obviously predictive AI tools are far more effective, for you to assess risks which are going to hit you fast soon. I think the current accounting standards also will have to undergo change, IFRS or Ind AS. I think certainly they lack real-time economic stress indicators. Today, investors, stakeholders are very sharp. I think they need beyond profit numbers. They need the kind of cyber attacks you've gone through, the ESG, challenges which the company is facing, whether it is sustainability risks or geopolitical risks. I think all this are required to be reported for them to take a call whether they want to invest in your company or stay in your company, any longer. I think firms, in my opinion, should start adopting, very, very quickly integrated reporting, frameworks to align, financial data with the risk indicators. For example, we, today do a lot of effort in terms of reaching out to the insurers or the banks, telling them what kind of products will work. I mean, there were days where you were relying on historical data, where actuaries were relying on historical data for them to carve out products which will sell, right? Today, based on analytics, we are able to go back to the insurers as quickly as within a month that this is the demand based on the data we have. We have data worth crores, right? And when we analyze, we realize this product will sell, and that actually works very well for the insurers. So if you look at partnerships today, the way it works for us is the more we go back to partners and the more innovation we create in the market, it is helping us to do better businesses. For example, on the health insurance side, we've all heard about large claims. I mean, so we've heard about situations where there are claims more than 100% if it comes to PSUs, or if it is the other players, it is 80-90%. We have been able to successfully bring that down to 40%. Not because of anything else, it's just because of launching the right products, understanding the customers better, increasing transparency in terms of declarations from the customer, which we encourage rather than discourage. So if you remember in the early days when an agent used to come, he used to just sign the form, "Baki main bhar dunga." Whether it is your 100 kgs or 80 kgs, he will decide that, Or whether you want to declare your lifestyle diseases or not, he will decide that. So I think those kind of problems are certainly, are getting away from. And Paisa Bazaar, for example, has done a phenomenal job. We have today 6 crore customers out of the 150 crore population who have assessed their credit scores to understand their health today before they go to borrow. And we are also now adding on to that, saying that in case your credit scores are low for reasons which you don't know yourself, you don't even know that somewhere 20 years back you had taken something and inadvertently you have defaulted. So we are trying to help customers improve their health score, credit scores. Similarly, on the Policy Bazaar side, we are now able to go back to the customers to share health reports with them, to ensure that they are able to predict what kind of health insurance they require. I mean, it is not a blind, this thing. So if you have some lifestyle diseases early in your age, it is important to predict what kind of health insurance will help you, what kind of health insurance products will work for you. I think these are things which we are trying to do. And with machine learning, we are able to assess financial risks more dynamically. I think that's certainly helping us in a very big way. So in my opinion, in the era of turbulence, corporate reporting must now go beyond historical data. I think clearly it should rely on real-time barometer risk, resilience, and recovery. I think that's my belief, and I think going forward, organizations which can adopt this will grow at a much faster pace than the organizations which still are reluctant to adopt such tools.
So it's a time not to see in the rear view mirror, but rather you see the, okay. So, Ananya, I think just to end this discussion, any one tip you want to leave the CFO with, any concluding remarks for 30 seconds?
Given we've spent a lot of time on basically the reluctance and this need to adopt, my one tip would be to borrow a line from Star Trek and say, go boldly where no one has gone before. And that is going to be the payoff in the future.
Thank you, thanks. Arvindan, any tip for the CIO and 30 seconds for concluding remarks?
Yeah, I would suggest that to build a strong data foundation, because strong data foundation is very necessary for us to make sure that the other technologies can be built upon it. That is what I would recommend.
Okay. Jatin, any final comments from you?
I would say, most importantly, invest in people. New talent, younger generation. We have seen a lot of enthusiasm in TIM in terms of adopting these technology. They can really bring in that perspective. They can really bring in that energy which can help accelerate on these objectives.
Thanks. I think we are on top of your time. But if in case you guys have any questions, maybe we can take one or two questions for the panels before we conclude this.
I heard that other side of the dais people are also equally intelligent. So I thought I have to come there. Sorry. My question to top-notch person over here, Mr. Arvindan, like about TCS, in spite of having almost worldwide presence and hundreds of companies, subsidiaries around and all those things, we still don't find TCS as a product company. Like probably AI should have come from TCS. So is there any plan? Because even AI has got tremendous risk and all those things. But like even Twitter is struggling today to restore it. So whether Tatas are doing anything to have your own vertical of coming out with your own AI to disrupt the world?
I think it is beyond my pay grade, but let me,
That's what she was saying. Think out of the box, move boldly.
See, the thing is, let me talk about TCS per se. Right? TCS is primarily a services company. What we see is how we can help the organizations in terms of moving the journey in terms of technology by providing them services. That is what we do. See, but if you also look at TCS, we also have products in place, right? We have TCS banks, right? We have a lot of other tools which are available in terms of it. But if you look at our history sort of a thing, since we are a services-oriented company, the product-related business, you might not be hearing that much of a thing which is there. But is there anything that we need to go in terms of whatever which you are mentioning in terms of building those sort of things? See, there are things which happens, right, as this thing. What we also need to look at is what is the purpose of the company and what is it we want to be in terms of it. That is what I can talk about TCS. From a Tata Group perspective, there are a lot of areas that we are investing in. For example, semiconductors, we are there. There are other niche areas in terms of it. Tata Digital, which has come in. While we are saying from a salt to software conglomerate, there are a lot of new areas that we are investing in, and we might see something in the future, right? But actually speaking, I'm not the right person to answer that.
Maybe I think that's a question for some other time, but yeah, please.
One of the issue which you highlighted, Mr. Arvind, is data minimization. Collection should be minimized. So real threat lies in a data structure and how many people are having that data. So like I am collecting, but 10 other people down the line is having access to it. So I would like to know what is the current status of a data structure in your organization, two organizations, which are dealing with the financial information, SPI of the individuals.
So do you want to answer that, Ananya?
I can take a stab at it and then
Sure.
you can follow. But you're right, absolutely. I think the data capture, actually data governance is a very underrated part of this entire journey. So setting up a data governance teams in big, large, very large firms, this is intuitive. But in smaller firms or medium-sized firms, we don't lay focus. So basically, the who gets access to the data, what is the, actually, first you start with standard definitions of data. Who captures, where is it stored, who has access, who has edit rights, what are the approvals, is a whole sort of a data lineage hierarchy that you have to define right up front before you go on to the journey. In fact, it is the core before you start on an automation journey. Yeah, so I think that investment is very important. We have in the past, even when we started our automation journey, I remember we had committed a 2-year implementation, and we completed it in 1 year, 9 months, but 6 months was on the data journey. Actually, the coding was far easier once the data was clarified. And I think that's what you're coming to. I think you need a team in place. We need the ability to think in data foundation. I think Arvindan also said that. I think that's very underrated, but it's a very important point.
See, no, very rightly said, right? And if you look at any data programs from reg reporting perspective, there are 3 tenets. One is your plumbing part, data engineering part. Second is your data governance, and third is your consumption. This data governance should talk about all these issues what she just mentioned, right? And this is very, very important. Do it right up front, making sure that, you know, how do you kind of control the access? How do you do this from policy perspective, the execution perspective, you know, who is forming the policy, who is taking the stewardship of that policy, making sure that those are being adhered to. So I think data governance is a very important discipline there, which needed to take care of such issues.
Yeah, and I think governance and technology can never be separate discussions anymore.
Exactly.
I mean, it has to
Exactly.
go together. I think it's very crucial.
Exactly, exactly. Okay, so I think that's, we are up for our time, but thank you so much for all your insights. I think just to conclude this, time is changing, regulators.
I want to take a minute.
Sure.
I try to do this in every forum I go, you know. So sorry for taking this time out. So I think one of the biggest problems which I see our country is going to face is from a young population, we are going to move into a senior citizen population in 20 years from now. The year we are talking about Viksit Bharat, 35% of India's population is going to be senior citizens. And roughly around 65% of today's senior citizens don't have any income, don't have any insurance. Just leave this thought with you that today's 40-year-olds are tomorrow's senior citizens. If nothing is done about it this today, we are going to face a huge social impact in this country. I think all of us sitting in this room and outside have a big role to play.
Beautifully said. You know, so thanks Rajiv. I think, you know, the regulators, you know, are tightening the regulations. Technology is enabler as well as disruptor. And, you know, the change in the organizations, roles are getting changed, you know, the new jobs are getting created. I think it's amazing time. How do we use it? How do we on the right side of the technology and make, you know, big use of it? But thank you so much. Thanks everybody. Thanks
Thank you,
panelists.
Nitin.
Thank you so much.